Micron, baby. Up 5.5% after hours after being down today, which obviously down today is not what you're looking for after it's an interesting day so far in the market. So my portfolio was certainly up a good 4% today, thankfully. But regardless, having a stock up, the rest of the market was pretty relatively flat. But Micron here after hours goes up 5.5%. What's leading to it? Well, it's a little lovely earnings call. They reported some earnings. We're going to get into that today, talk about them, see what they did, and why this stock is responding positively. Investors are buying back in, huh? So, you see Micron beats on a non-GAAP EPS standpoint by 8 cents. Posted a 45-cent non-GAAP EPS. GAAP EPS of 36 cents, beats by 8 cents. Revenue of 4.8 billion, down 17.8 year over year. They beat by 110 million. Okay. I mean, they beat on a revenue aspect. You don't like to see the decrease, but it's slightly understandable given current atmosphere and as far as pricing issues that they've had for sure. I think this is understandable. So I would like to look at some of the fine details for sure. So they, I don't know why I said it that way. This company, unlike Nike, actually gave out guidance, and guess what? It's good guidance. It's good guidance. They see 4.6 to 5.2 billion in revenue for the next quarter versus a 4.88 consensus. So good guidance there, and EPS of 40 to 70 cents, which is on the upper end of the consensus of 52 cents. So good guidance. Good guidance. Gross margin of 29.5 to 32.5. Quarter two operating cash flow totaled $2 billion, down from $3.4 billion last year, but overall that's a lot of freaking money hustled in. That's crazy. DRAM revenue was down 26%, while bit shipments grew 20% in the same period. So obviously DRAM pricing was a bit of an issue. That's where you really see that decrease in revenue. For NAND, revenue is up 9%, bit shipments grew 20%, and average sale price were up on the quarter in the upper single-digit percent range. Adjusted gross margin 29.1 versus the estimate of 27.2 that they were expected. So, love everything about that. It's good news. Now we're going to, I think, take a look at the slides. I love when a company prepares slides for their earnings. It just makes me happy because it's lovely stuff. Let's go into Micron's earnings, a little bit more of this fun stuff. Hey, it's Sanjay Mehrotra. He's the president and CEO. See that stash? That's a man you can trust right there. So, for highlights here, you see strong quarter two results, including revenue at high end of guidance range. Love that, right? Even as the crisis began to unfold halfway through the quarter, they still ended up with a positive quarter. Very good looking quarter. Positive free cash flow for 13 consecutive quarters. You like to see that too. You do like to see that. 3 full years that they've managed to go ahead and put up positive cash flow. 3 full years in a row now. For the response to this crisis, Micron says that ongoing communication with suppliers to ensure there's a continuity and identity. They are identifying supply gaps, increase the on-hand inventory of raw materials, which is certainly 100% expected. I think they're going to keep a production rate, and they'll hold on to what they have. Increased multi-sourcing of parts in order to reduce supplier dependence risk. They want to be more independent. Gotta love that. They added assembly and test capacity in order to provide redundant manufacturing capability. For the near-term outlook, they expect stronger demand from data center due to remote work economy, increased gaming and e-commerce activity. There's no doubt about that. That will certainly be a big factor, all things considered. Data center demand in regions looks strong and is leading to supply shortages. Wowee. Recent increase in demand for notebooks to supply work from home and virtual learning. Obviously, Micron makes chips that are in a lot of these things, so it makes sense. For smartphones, consumer electronics, and auto demand were below prior expectations. Not too much of a shocker. As people are out of work, they're not necessarily trying to buy frivolous stuff like a phone if they don't need it. They're more likely to purchase a laptop so they can work from home than they are a new phone. Moving supply from smartphone to data center markets for both DRAM modules and solid state drives, baby. For the outlook, industry demand annualized growth rate to the mid to high teens for DRAM, long-term Micron supply growth in line with industry demand growth, CAGR. For NAND, you've got industry demand KGR in the 30% range and long-term supply growth in line with industry demand growth. Good for them. Industry supply could be impacted by travel restrictions that hinder equipment deliveries and support. So for DRAM, they introduced the first to introduce a 1Z in volume production and expect over half our bit production to be on 1Y and 1Z by summer 2020, managing the construction schedule of new Taiwan clean room expansion carefully, and they remain on target for the first output in cyclical year 2021 is what I should have said. Began sampling 1Z based DDR5 on track to introduce HBM in this year, the cyclical year this year, and making good progress on the 1 alpha node. For NAND, they expect to begin production of the 128 layer first gen RG node in our current quarter, with revenue shipments in quarter 4. QLC SSD bit shipments rose by 60% sequentially in quarter 2, with a meaningful portion of consumers' SSDs now shipping. With our QLC technology, expects continued growth in the second half of fiscal year 2020. Solid-state drives revenue also grew 20% sequentially, led by greater than 50% growth in data center solid-state drives, baby. End market highlights. You gotta love these highlights here. You gotta love looking at these highlights. So, record consumer solid-state drive revenue assisted by growth in QLC NVMe's. Expect strong sequential bit growth for NVMe in quarter 3 as we continue to see transition from SATA to NVMe. You know what? They're just making me all flustered. They achieved several customer qualifications of our 96 layer SATA data center SSD. In mobile, they're the first company to deliver the LP5 mobile DRAM to customers. So, love that. So, really, the goal here is that it enables longer smartphone battery life and high-performance image processing. LP5 and UFS are more important to 5G adoption as 5G adoption accelerates. Data center, graphics, and PC. From data center, they see strong demand. No shocker right now, specifically. In graphics, the GDDR6 bit shipments increased more than 40% quarter over quarter, and PC DRAM bit shipments and revenue declined sequentially, driven by slow seasonal demand and CPU shortages. So, on the automotive industry, record DRAM and NAND revenue was approximately half of auto DRAM revenue. So, for industrial, they record bit shipment of DRAM and NAND. They expect secular growth in the IoT markets, Internet of Things, baby, as 5G rolls out. Hey, what's up, David Sinzer, Chief Financial Officer? Let's talk about what exactly we can talk about. Performance and technology. Obviously, we saw these numbers already. You gotta love it. Average sale prices were flat for DRAM, so love that. It's revenue by business. Overall, you see year-over-year changes decreasing on all of these, which isn't too much of a shocker. Obviously, they've got quite a bit going on, but overall, the company is running pretty well. Net income of $517 million. Gotta love that. Operating income of $542 million. And obviously cash from operations, $2 billion. You gotta love that. $44 million was used to repurchase shares this quarter. The fiscal year 20 capex of $7 billion to $8 billion. $10.6 billion in liquidity at the end of the quarter, and $2.7 billion of net cash. $2.7 billion in net cash. This guidance, obviously, we saw this. As far as this is concerned, gross margin looks like it's going up, which you like to see. Operating expenses similar to this quarter, and EPS should be a little bit higher than this quarter as well. So you like to see that. Other key data, we kind of looked at this already. It's just a little bit more of a fine breakdown and chart as opposed to what we saw before. I like this. This is an interesting one to look at. Historical revenue by technology. So obviously, two main businesses of DRAM and NAND. You see here overall, it's pretty well been similar for the past little while here. But over time, you see things change. So back in fiscal year 2017, they did around 68% in DRAM, 28% NAND. And now it's closer to like a 75-25, but not quite there. But they've definitely increased the percentage they make on DRAM as opposed to NAND as well. So you gotta love seeing that. Again, just some charts that we already know this stuff. Okay, all right, we understand what's going on here. Micron. But as far as net cash is concerned, I did want to point out this. So quarter over quarter, you see pretty much same cash position. Nothing too wild. 2.69 billion. That's quite a lot of money. And all of a sudden, I just got sick halfway through this. Well, I kind of been a little sick, but it's okay. I hope you enjoyed, and let's have a good one.